Well, good morning and good afternoon to several people as well. Uh, my name is Luke, and I'm a business advisor here at Collective. And Collective is an all-in-one back office solution for a self-employed person. Essentially, you can think of us as kind of an all-in-one solution for an S corp, or someone that needs to be an S corp. We would handle setting up the business, setting up the LLC, making the S corp election, providing a payroll processor to take care of the your paycheck as a owner employee of the S corp, and then we would also handle your bookkeeping, ongoing tax support, and then business tax filing at the end of the year. So when it comes to the S corp, we pretty much do the whole shebang. But today we have a session that we like to call Tax Tuesday, and essentially what it is, it's an AMA. It's an Ask Me Anything session surrounding, business taxes, best practices when it comes to running your business. Just general questions about taxes and the financial workings of the business. Um, and also, just to kind of get the disclaimer part out of the way, just don't consider this like what I'm getting ready to say. Don't consider it, official legal advice or tax advice. This is just, educate for educational purposes only. Um, and the stuff I'm getting ready to say could be wrong. The tax code is really complex; it changes all the time. So before you do anything, consult with a CPA or a tax attorney before you take any action, on this information. But now that we've got that out of the way, let's go ahead and get started on answering some questions. And the first one, okay, well, this is a pretty straightforward one. How can I reduce my tax bill in 2024? Well, there's several things to, legally reduce your tax bill, as a self-employed person. For one is to optimize your expenses. Make sure that you're writing off everything that you're allowed to write off. So, things like your home office deduction. If you work from home, you can write off a portion of your mortgage interest, of your utility bills, things like that. So just make sure that you're, optimizing your expenses and keeping track of your expenses. Another thing is self-employed retirement accounts. When you're self-employed, there is just sort of there's an increased capacity to save for retirement. So that's another good way to save on taxes too. And lastly, you might want to consider going the S corp route. And an S corp, essentially, before you become an S corp, like if you're just a sole proprietorship, or even an LLC, even if if you've gone that step, you're paying a lot in self-employment taxes. Self-employment taxes, like it's a flat tax rate of 15.3%. Before you become an S corp, or before you make an S corp election, that's the technical name for it. And it's paperwork that's filed with the federal government. It's done with the IRS. But before that happens, let's just assume that you're netting, around $100,000 in your business. Before you become an S corp, how you'd come up with your self-employment tax is you would take 100,000 and you'd multiply it by 15.3%. All of your money is subject to that tax rate. But with an S corp election, what happens is that you essentially become an employee of your own business, pretty much. And since you're an employee, your business will pay you a salary. You will get paid a wage, just like you'd make if you work for someone else as a a W-2 employee. But the cool thing about S corps is that the only chunk of your earnings that's subject to the self-employment tax is your salary. So, for example, let's say that, like I mentioned earlier, let's say that someone has made $100,000 in their business. That's their net income. And let's also assume that a reasonable salary for them is somewhere around $40,000. Let's just assume that's a reasonable salary. That first $40,000 is still subject to the self-employment tax. You still pay it. But the other $60,000, those are considered distributions on your behalf. That's the technical name for it. And that chunk of money is no longer subject to the self-employment tax at all. So under this scenario, an S corp is saving this hypothetical person $9,180 in the self-employment tax bill. So, once you reach a certain income level, then, chances are it can be pretty advantageous to go the S corp route. And that leads me into the next good question that we got here is how much do I need to earn to switch from LLC to an S corp? Great question. And essentially, what we say is $60,000 net income. If after your expenses you expect to make, around $60,000 in a 12-month time period, then that's when we say generally it's worth it to first of all to join collective and become an S corp. And the reason we say that, and like just to be clear, that's a collective number. Like that isn't some official number out there, but essentially the reason we say $60,000 is when someone elects the S corp status at around $60,000, they're generally saving, and again, very generally, they're saving around $5,500 in the self-employment tax. That right there, to handle everything, like for a collective's fee, to handle pretty much the whole shebang when it comes to an S corp, that is essentially a little bit below, or I'm sorry, that is above what you pay collective for the entire year. So, at $60,000, it's just kind of a good rule of thumb to say, okay, if I'm making at least this much money, I can reasonably expect to save more than, what collective is costing me. All right. Since the tax code always changes, how can I always stay up to date? Well, that's a really good question. For one, I mean, I know this is a pretty simple answer, but the internet. I mean, really, the internet is your best source. But to be honest with you, the tax code is complicated, and it is always changing. The best way to stay up to date is to have a competent tax professional in your corner. Um, so if you have a relatively complex situation, it's usually a good idea to have a professional handle it for you. It's not worth trying to keep up with it yourself. You've got enough things going on. How important is accounting for a business? Um, it's extremely important. For one, it's important just from a tax perspective. Like in order for you to know what you owe in taxes and to calculate your taxes accurately, then you got to do accounting accurately. And if you don't do that, you could overpay on taxes and you could underpay on taxes. Let's say that if you're not doing your accounting the right way, you have a chance of getting audited. And that's not a fun time. So accounting is extremely important for a business, not only on the tax end of things, but also just on the providing, I guess, substantiation for financial decisions. If you don't know what your business finances looks like, which is what a good, sort of accounting system provides, then it's really hard to, make good, informed, rational decisions for your business. How does the WFH change accounting for W-2 employees? Anything I can write off? Um, I'm not sure what that stands for. Does that stand for work from home, maybe? But essentially, what changes in your accounting for W-2 employees is you're essentially writing off your employee's salary as a business expense. That's essentially what you can do. And like anything that you're providing for your employees, you can generally write off. Does net business income for tax purposes include shareholder distributions? Yes, it does. So essentially, net income, just think about it. Think about that as just your total net income from the business before any distributions or salary to yourself. So if in total, after business expense, like operational business expenses, like marketing cost, your home office deduction, things like that, that's your net income after that. And then, part of your salary will be paid out of that net income, and the rest of it will be distributions. Okay. When would you not want to become an S corp? Um, Excellent service or excellent question. There are situations where it's not necessarily a good idea to go the S corp route. And really, one of the big one is the amount of money that you expect to make. If you're not making enough money to where an S corp will save you more than whatever professional fees you're paying or anything like that, then it's not really worth it. Like, if the S corp isn't going to save you enough to even cover a tax professional's fee, then um, it's not really worth it to go that route. Like, why would you have a more complicated tax situation if you're not going to save much money? um, so that's one big one. And another one is whether or not your income source is subject to the self-employment tax, because not everyone's income source is. And not everyone's income source is for example, let's say that you have rental properties, or sorts of passive income like stocks, bonds, things like that. Those are usually, they're not subject to the self-employment tax. So if they're not subject to the tax, then there's not really a reason to elect the S corp status on that if they're not subject to the tax anyway. So those are the two main, I guess, big reasons why you wouldn't want to become an S corp. Oh, well, one more is let's say that you want a little bit more flexibility on how many people has an ownership interest in your business or things like that. An S corp can usually only have up to 100 shareholders or owners in a business. So sometimes if you're involved in fundraising and need more owners, then that can be pretty limiting. So that's another thing to keep in mind, is that there's some restrictions on the ownership nature of your business. Okay. Let's move right along. I think we have more questions coming in. Okay. Can you be an LLC and an S corp at the same time? Yes. So a lot of people have kind of a misrepresentation about what an S corp actually is. An S corp isn't a business entity by itself. It's believe it or not, it's not a corporation. And I know that sounds a little strange because the word corporation is in the term S corporation, but it's not. Like, what it is, it's a tax election. So you either have to be some sort of business entity, like an LLC, like a corporation, before you can elect the S corp tax status. It's just that Collective, if you came on board with us, we would go the LLC route. We would form an LLC and make the S corp election. And the reason why we do that is generally LLCs, are oftentimes, pretty sufficient for small business owners. Sometimes going the corporation route can be a little bit overkill, because one, typically there are requirements for corporations that you don't have for LLCs. So when you're a corp, even when you have an S corp election, You're supposed to have, a board of directors. You're supposed to have board meetings, keep board meeting minutes, things like that. There's just some additional, I guess, requirements when it comes to an S corp. Um, so, and when you have those additional requirements of a corp over an LLC, they don't, and like typically they're not providing, a corporation typically doesn't provide any sort of additional asset protection like an LLC does, an LLC provides just as much. So, usually people need to go with LLCs. However, there are some situations where you might want to go the corp route, and the corporation route rather. And that might be because you want to have, like, you want some flexibility in ownership, and you want to fundraise, and with corporations it's usually easier to issue stock and things like that. So there's several, the world of taxes is complex, and there's several reasons why you should be one or the other. How do I start tracking sales tax, and where do I pay it? Well, here's the problem with sales tax: is sales tax is usually a state tax issue. So every state has different ways to pay sales tax, but a lot of times you can do it online. They provide you with, you know, essentially what you got to do is you have to track your sales. You have to track the amount that you've made in sales specifically, and usually you have to multiply that by a specific tax rate and pay that over to the state. And you can usually do that via online on the Department of Revenue's like state website, somewhere along there. It kind of depends on the state. And it's very important to track and pay sales tax, because things like sales tax, trust fund taxes, Social Security and Medicare taxes that you're supposed to be taking out of employees' paychecks, the government takes those extremely seriously, because in their mind, if you're not paying over sales tax, you're not paying over other people's money. Like, other people are paying sales tax on the things that you're buying, and you're supposed to pay that over to the government. So, in the government's point of view, you're stealing other people's money, and they take that very seriously. Okay. Would sales tax be a business expense? Yes, it would. Yeah, you can write off sales tax. Okay. Can a partnership become an S corp? Yes, yes, it can. So essentially, a partnership is just another word for two or more people on an LLC. That's essentially what a partnership is. Um, and a multi-member LLC can make an S corp election. Sure. Now it's a little bit more complicated, because now, of course, you have partners, and you've got to decide, how much is a reasonable salary for each of these partners, how much, are they allowed to take out in distributions. It's a little bit more complicated. Okay. What's the best way to handle estimated tax deposits? Well, Estimated tax deposits, that's really another word for quarterly tax deposits. Like essentially it's your ETDs. It's what you're required to pay quarterly to the government, typically when you're self-employed. And you're still free to do it, by the way, if you're employed. Like if you work for someone else, you can still pay estimated taxes. But it's mainly for self-employed individuals. And essentially, the reason why they exist is because a lot of people think that taxes, they just kind of assume that taxes are paid at the end of the year, but taxes are really paid throughout the year, or they're supposed to be paid throughout the year. And essentially, um, the government, like when you work for someone else and you're making a paycheck, then taxes are they should already be coming out of your check and paid over to the government. Your employer is supposed to do that for you. But when you don't have an employer there doing that, like when you are the employer, it's your responsibility to pay over your money to the government. So that's where estimated tax deposits come in. And they're due on a quarterly basis. And really, how you handle them is that's why it's a good idea to keep your finances organized, to keep your accounting organized, and have some sort of bookkeeping process throughout the year, because you're only taxed on your net income, which means after you write off expenses, you're only taxed on what money you keep, not what you spend back into the business. So the only way that to calculate an accurate quarterly estimated payment is each quarter knowing how much you've netted each quarter. And you can only do that if you have a consistent bookkeeping process. So, but also too, to be frank, that's where Collective comes in. Like, we'll handle the bookkeeping aspect of things, the payroll and everything else. So you can focus on your business, or you can focus on the important parts of your business, like taking care of your clients, growing it, and other things like that. Okay. What is an operating agreement? So, an operating agreement is essentially a document that is behind your LLC. And the operating agreement kind of lays out who owns it, how the LLC is structured, um, what happens on, when the business is dissolved. Like essentially, it's kind of like the legal bones of a business. So it's important to have an operating agreement on file. Okay. How can you make an amendment to your operating agreement? That's a very good question. So I believe this is a little bit out of my wheelhouse. I don't have a ton of experience in operating agreements, but I think essentially what you have to do is just when you amend an operating agreement, is just um, record it. Like just keep a record and a history of your operating agreement, when it was changed, what it said before, what it says now, and just make it official. And for example, let's say that you um, like for let's say that you have an LLC with multiple members. Like essentially, that's a partnership. And what you might want to do is have like an official partnership meeting, discuss on changing the operating agreement, vote on it, record all of that, and that might suffice. But usually, with things like that, with legal documents and whatnot, it's usually a good idea to consult with an attorney and get some solid legal advice surrounding it. How can you amend your articles of organization? Well, that's a kind of a different process, because your articles of organization are filed with the state. So essentially, your articles are kind of that's kind of like the formation document of your business. It's how it started. So if you need to amend that, you usually have to file paperwork with the state to amend that. Okay. What are your articles of organization? Oh, that's a good question. So essentially, it's a document. Excuse me. Excuse me. So essentially, it's very similar to articles of incorporation, which is kind of like the a document behind a corporation, and it kind of it outlines sort of like the initial statement that's required to form, an LLC. Um, and it's essentially it outlines the governance of an LLC, and it just kind of shows where the LLC is filed and everything like that. It's like it usually includes like the name of the LLC, the type of legal structure, like an LLC or whatnot, the registered agent, and where it's well, also like whether the LLC is managed by members of it or managers of the LLC. So it has all that on there. Okay, I think I have time for one more question. Oh, um, so a registered agent, it's essentially it's an individual or a business that is designated to receive service of process for another business, like for the LLC. That's what a registered agent is. So, and essentially, so for example, let's say that if a legal action, like such as a lawsuit or a summons or anything like that occurs against the business, the registered agent is the address where the state might send that paperwork to. So it's um, essentially like an official place to receive mail for a business, important mail like that. And it looks like that's all the time that I have today for Tax Tuesday. And I enjoyed it, of course, like I always do. Thank you everyone so much for hopping on. And I'll be here next week as well if you'd like to do this again. And also, too, if this has been helpful for you or you're interested in an S corp, you might want to consider, going to our website, send us a message on Instagram and schedule a call here with Collective. And what we can do is you can have a conversation with a business advisor. We can see if it'd be a good fit and go from there. But until next time, I will